Patron, take them away.
Well, boys and girls, we're having an off-the-cuff scruffy moment. And why is that? Well, because I like a coffee, I need a coffee, and we all know Scruffy likes a coffee. And trust me, I'm knackered, because it's 8:30 at night. I've been here since 6 o'clock this morning. And because there's a lot of you know me, you'll know that I genuinely try and help if I can. And I've opened my mouth to a friend of mine whose books are in a bit of a mess, and he's coming on to year end. I said, okay, then I'll have a look at it. That's about 10% of what I've got to do. It's going to take us ages. The pile is this high. So I'm going through copious amounts of coffee. And while I'm working, I'm keeping half an eye on some of the charts. In fact, I'll show you a chart and then I'll show you where I'm going with this. Now, I called this chart out this morning before I went to market, and it's pulled 163 quid. All right, I'm quite happy with that. Now, what's all this got to do with the coffee at Scruff? Well, it's twofold actually. The prop account that you're looking at there just grows in the background gently. It's constantly ticking away. It's getting better all the time, and it's paying me very well. And I've been putting that money away, and it actually paid for this house. Cashed it all out, bought the house, and then started another little one. And I did a challenge where I was actually putting money into. I started with a small amount, and I was building it up. And I was putting the little quid here and the £10 there, which is actually grown, as you've just seen, into a Vanguard account. So I'll take half the profit out and I'll put it into a Vanguard. And if you give us a second, I'll log in and I'll show you that. I'm going to do a full update on this end of the month, because I'm quite pleased with it, because I started with 118 quid. And the portfolio, if I drop this down, because I've now split it and whip it across, is 4.6, and I'm looking to drop some more money in end of the month. The anniversary of that challenge that I did is 5th of December. It means I'll have turned 118 quid to over 5 grand, as long as I don't screw up this week, in 1 year. All right, so I'm quite pleased with that. Now, what's this got to do with a slice of bread? Well, what I'm showing you there is the capabilities of what prop can do for you. All right, little steps here and there. And the reason I showed you the trade I did today is many people overtrade. They do too many trades, and it's been a subject we've had inside the Scruffy Squad, certainly for the last couple of weeks, but it's kind of coming to a point. We're doing a Zoom call tomorrow night based on your stops and your targets, and it's really to make certain that you're profitable, because a lot of guys, they go to market way too many times. You've probably got the skill set, however you overtrade, and you certainly over leverage. Now I'm going to touch on something in the prop, and then I'm going to show you something that's coming into my message, which kind of triggered this tonight. Now, if you're overtrading and you don't know you're overtrading, there's a simple fix. You lose once, you stop, period. So if you lose the first trade on the day, you don't go back to market. You can't go back to market, because you're out of sync and you're not reading conditions right. But it stops you revenge trading. Right? Another way is you cap the amount of trades alongside a single loss. Now, I work on a single loss and I look to trade once or twice a day. If I've got a reasonable amount off the first trade, I may go back to market the second time, because I know the first trade will play off any losses if I go wrong. However, if I'm quite happy with the first trade, I'll walk. That's it. I won't go back to market. Because if you're trading over and over and over and you think all you need to do is constantly click this mouse, you'll probably find that you're either just going to be spinning wheels or you're going to be losing all the time. Less is more. Unless, of course, you're looking at what the fives have just done. Now, I'm going to give a little salute to Volker because he got me involved in this a long time ago. And I often mention him. He's a great guy. But I often mention the guys over in sort of Israel. And my heart goes out to them at the moment. I've got loads of time for Thomas, Saul, Ruben. And my hopes and prayers are really with Alex at the moment. So if you're watching, kid, I'm rooting for you every day. I really am. And I'll keep messaging you and keep your spirits up. All right? You keep trucking, son. I love them guys to bits because I know them personally, which is why I have kind of a bit of a passion for the 5%ers, because when they first sort of got introduced to me, I tarred them with the same brush as the FTMOs and the MFFs of this world. And I've got no time for the prop industry. I genuinely don't like it. I think it's a road to ruin with the wrong company. The 5 is slightly different because I've had conversations behind the scenes with them and they genuinely have traders at the front of their mind. They want to help. You know, don't get me wrong, they're a business, they have to make money, you know, but they genuinely try and give customers what they want, you know, you guys, the trader, and they certainly give you the tools for it. And if you go into it, you'll see the VOD, you'll find me in the VOD, you know, video on demand, and you'll see I gave them a strategy that's battle tested and used. And I've been on many webinars with them. So I do have a lot of time for them. And they fired in a deal which I gave over to my guys in the Scruffy Squad. And it's a great deal. It is a Black Friday deal, and sometimes I take it with a pinch of salt, but this one's pretty darn good. So let me quickly show you what it is if you're looking to move into sort of trading as seriously as what I do, this can definitely be a way for you. So you buy any hypergrowth or the 250k bootcamp and they'll give you a bootcamp free. That's a hell of a saving. But why am I bringing it up? What's it all about? It means that if you make a mistake through over trading and you do whatever, you've got something to fall back on without going, oh my God, I can't do this anymore. I'm sick of this. It's a safety net and it's free. So it's only available between the 20th and 27th, which is why I'm dropping it out now. Maybe it's a little bit late to the party, but you've got till the 27th to get it. There is a link for it in the description down below, and it's one per customer because it is a good offer. Now, how would you do this? I think it's quite simple. You trade one as a swing trade, and you trade the other as a day trade. Or you could have two swing trades for that matter, like a position trade if you like. And what I would suggest is doing this. Once you buy it, you can go in the VOD and you'll see a strategy that I gave them. It's the same strategy that I spoke about at Traders Day Live, where I was the guest speaker there. I've used that strategy for over a decade. It's battle tested and it works. And it's the strategy that bought this house. Okay? If you want to put it that way. You could put that into your hypergrowth or your boot camp and then trade the other one as a day trade, but look at it as a training ground because it's cost you nothing, but you've still got skin in the game. I think it's a great tool and it's a good opportunity to snatch on it, because when it comes to trading, and I say less is more, I genuinely mean it. You know, I have a good size account, but I trade very small in relation to it. Now, when you go into this boot camp, or even the hypergrowth, look at your drawdown, use that as your account, and use the account size as buying power, and see how long you stay in the game. So you are using a less is more principle, because the drawdown is obviously a bit smaller than what the account is, obviously, because you've only got a limited amount. But it'll keep you in the game and it'll keep you grounded. Lose once, stop. Limit yourself to 2, 3 trades max a day. Soon as you've got money that you want, say you want 100 quid a day, and you did it with first trade, why the hell are you going back to market? You don't need to. You've done it for the day. Simple stuff, guys. But I just kind of want to bring it to your attention, more so about the over trading, because we're going to have a chat about it tomorrow night in depth. And I'm going to give a salute to Michael, because I'm actually doing this for you, kid. When you're setting targets, there is minimum targets, there's optimum targets, and then there's obviously trailing targets that go on forever. But it's knowing how to do it. And that's what we're going to discuss. But not only are we going to discuss that, you've got to ensure that your stop is not only safe, but also cost effective. So a bit of advice I'm going to give you as I wrap this up. When you go to market, you need to ask one question before you press the button. Just one. Can I afford this? Because you should know roughly where you're going to get in. Even if you're just clicking the mouse, you should know roughly where you're going to get in. And you should already know where the stop is before you go to market. You shouldn't just go to market and then think, stop can be up there somewhere. No, you should know where it is. And it wants to be hidden behind 2 structure points. Either behind a support and resistance and a major swing, or support and resistance, a fib, and a moving average. Any of them. But one of them wants to be support and resistance. And I'll tell you why. Because it's a key bounce point. If that's in its path, it'll hold the price. If it smashes through it, you've probably got a problem here. And then you have a second point. The swing, the top of a move. Moving average will act as a bounce point as well, as long as it's a decent moving average, 20 or 200, 150, something like that. And also fibs, if you know how to draw fibbing properly. And fibs are a subject on their own. If you watch me trading, I use fibs all the time. They're not a holy grail, but they're a perfect mapping tool. But they are respected if you know how to draw one, because you can't just throw it on willy-nilly. You actually need to know where it goes. So if you've got 2 of them, so it's your support and resistance, and then one of the others is your stop, you know the distance. You can calculate how much that costs. Not in percentage of account or anything like that. Physical money. So if you've got £1,000 and it's 100 pips away and you're £1 a point, that's 100 quid, 10% of the account. £100 is tangible. If you say 1%, it means knack off. Doesn't mean anything. Do it in money. And then you can sort of think, don't fancy paying 100 quid on this. Oh, that's a bit steep. Well, what you've done now is you give yourself a choice, because you asked one question. Can I afford this? So you either don't take the trade or you reduce the position size, but you leave that stop where it is. You can't move the stop, because the stop has to be in a position that protects the account. It's its only job. It's all it does. It protects the account. Has no other function. It's not part of the trade. Nothing. And that's another reason why people fail, because they go, I'm on 3 to 1 or I'm on 5 to 1. It's all horseshit. It has one job: protect the account. That's it. And you need to ask yourself, can I afford it? And if you can't, you reduce your position size till you can afford it. So you half it. 50p a position. 50 quid. Don't know if I want to do that. Okay, half that. 25p a point. 25 quid. Yeah, I can do 25 quid. Right, there you are, you go. Now you look at where your target possibility is. Is it going to be the next bounce point? Now, is that going to be 25 quid and more? Well, if it is, brilliant. If it isn't, it needs to be an absolute slam dunk of a trade that you're almost 99% certain it's going to run to target. And that's the way forward. So if you're 100% certain it's going to target, but it's a small target, fine. You know, if it's not, and you're sort of here, there, whatever, you need to start with a one-to-one basis. Because the one-to-one basis is, as long as you're winning more than you're losing, you'll make money through time. But it's all about being sensible. So it's just a few thoughts while I'm undoing this and about to make another coffee. Should get an intravenous drip, really, shouldn't I? Bloody hell. And Winky's gone to bed, so I've got to make it myself. So no doubt I'll be getting a kicking in the morning when I've made a mess in the kitchen. It's great being me, innit? And then I've got to be up at 6 in the morning to sort the squad out as well. Bloody hell, it's dead. I do get myself into these things. So anyway, boys and girls, check the link. The offer's there available to you. Do take it. And then once you get into it, you'll be able to go on the VOD, video on demand, in the dashboard, and you'll find all my webinars, and you'll find a strategy that I put in for them, and it'll help you pass this thing. So as always, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.